Hi, everyone. My name is Lee Honish. I am the former head loss mitigator for IndyMac Bank's HELOC division, the foremost leading authority on distressed properties in North America. I am also the best marketer for distressed properties in North America. I am the creator of a company called Home Advocates, and it gives me great pleasure to introduce a couple of people, sort of our updated staff going into Q4. It's a Q4 update, I guess, for my investors, since there's only one of me. That amused me. First and foremost, joining us on the call is CEO Derek Kelly. I don't know if he has his mic on or off. As always, you can reach the CEO.
Morning,
there he is.
everyone.
Morning, Derek. How are you?
Morning, Fred. Morning, everyone.
Good morning.
Excellent job. He is the CEO of Home Advocates. If you want to reach him, 833-969-4673. He'll be able to help you and answer any questions that you might have. And introducing our brand new Chief Operating Officer. We haven't really finalized any of the terms or what the heck he's going to do. But hey, if all of you want to call him, I highly recommend it. Call 833-969-4673. We'll get him on the answering machine and update everything, and you'll be able to get a hold of him. He is a broker. He is a mortgage broker, and a mortgage broker, and a this, and a that, and a radio personality. He is a close friend. He is someone I trust dearly. He is probably one of the nicest. Derek and I were voting on this. Probably one of the nicest human beings we know. We're putting you into competition with my friend in Vegas, Eddie Yeagan, who is my coach out there. And of course, Derek said, "How do you know such nice people? I mean, it just doesn't seem to fit with you." And I laughed and I said, "Right, like the few people that I talk to are really literally the nicest people I know." And I'm very happy to have him on the team. His name is Fred Solomon of Solomon Financial. First and foremost, give out all your information, Fred, for everybody who's joining us.
I'll just text it on the chat. That will be easiest, so that way if they want it. But
That's sure, of course they do. People probably have mortgage questions or life questions. Fred's really good with life questions too. 714-403-7334. If you're listening and can't drive, I'll make sure, if you're watching this as a replay, it's down in the link. I'll make sure of it, and you'll have links to everything that we talk about today. And it's Fred at nopoints, noclosingcosts.com. And if you have any questions for anything about Home Advocates, Derek quietly chimed in, Derek at homeadvocates.io. I'm unreachable. There's two of them now. There's two people. You can talk to them. They'll tell me what to do, and they do it very well, actually. I'm very proud of both of them. So I'm going to switch over to a screen share right now. And I would like everybody who doesn't know anything about Home Advocates to open up your Google. Why? I'm changing the algorithm. I'm just doing marketing. And type in Home Advocates. Make it simple on yourself. I would tell you it's homeadvocates.io, but just Google Home Advocates. It'll put you right onto the front page of our website. You can find Derek's information. You can find Fred's information. It's all very simple. Fred is joining us, and we are going to talk about direction of the market. More importantly, we're going to talk about this thing that's on the screen right now. This is the latest existing home sales price. It's up 7%, Fred. Isn't that fantastic news? I mean, now going into November, knowing that we went up another 7%. I mean, that's just phenomenal appreciation within the market. But as I recall, and maybe you could correct me, didn't we start off the year saying it was going to be somewhere around 12 to 15%? And they've constantly corrected it as we've come around month after month after month of the appreciation getting smaller and smaller. That seems to be a fact people have forgotten about this year and the quote unquote appreciation news. I'm wondering what your perspective is, having to create loans for all of this. How do you see the market right now?
There's certain sectors of the market that are doing incredibly well, and there are situations where the government is hiding information from the public. It's not on the local.
What?
Yeah,
The
it is.
government hiding information? The National Association of Realtors who do nothing are hiding information, Fred? I'm so shocked.
It is an. I don't want to get political, but I think in about 30 or 40 years, when these doctors are dying and on their deathbeds, they are going to spill the beans about what they know about COVID. And I think that that the people that are in charge of the media are being told not to report on the data for all the homes going into foreclosure, and 2.1 million homes that are 30 days delinquent, and another 1.2 million homes that are 90 days delinquent. Once we start seeing that information on the 5 o'clock and 6 o'clock evening news, and the general public catches wind of it, the only people who care about that data are what we call us information whores.
Yeah.
And those are the people who care about the data. For the people who don't care about that data, they're not going to search for forbearances going into default. They're not going to search for any of that data. So until the general public finds out about it, they're just thinking that real estate prices are going to come down, that the bubble's going to burst. They don't know why they think that. They just think that. But if they actually gave facts as to why the bubble is going to burst, then by all means, we would see the prices drop much faster.
Yeah.
And much sooner. That's my opinion.
No, I agree with it. And I'm going to prove that up real quick, and then we'll get over to interest prices, and then we'll answer questions for everybody in the room. So I sent a link to the entire room about this market data. It's real. You can see it at the top of the screen. No bells, no whistles. This is the one that they use all the time for their existing home sales. Feel free to click on it. And then let's just go with the summary of their statistics, Fred, right? Like, what data did they use to come up with this? Do you prefer data or data, Fred?
You pick.
All right, data it is for today because I watch Star Trek. So click, that makes me old because it's not the correct Star Trek either. All right, click on the summary of September 21 sales. This is their PDF that they send out, and it's so nice. Look at it, Fred. It's gorgeous. Look at this thing. Total home sales are up, and I mean, whoa, what's this page 2 thing? So they're right. Prices have appreciated 7% over here. They're right. But if you look carefully at these last 3 months, we've been on a steady decline for the last 3 months. And in fact, it looks like, I could be wrong, Fred, based on my math, over the last 3 months, we've depreciated about $10,000 in median home price. Now, I'm no rocket scientist, okay? I only play a professional banker here on these for our coaching students and everybody who follows me. But this looks like, and again, I could be wrong, Fred. I could be completely wrong. Do I get one of those cool little marking devices with this too on Zoom? Wait, hold on. This is very exciting. I've never tried this. I'm going to try to annotate. There, I'm going to try. Let's see. This right here sticks out like a sore thumb. Are prices going up? Yeah, they clearly are. You know what? Sales, the median price is going up. Now, I don't know what constitutes a crash, Fred, but this is pretty much the direction of the value of properties. So the question is, right, does it have to go back to 2018, 2017? Like, what number will people in this path, right? So somewhere along here, if we draw a straight line, which not bad by my part, where does it have to come back down to for people to say, oh, wow, prices are correcting or crashing? Because guess what? If this is the overall median price here, that means some markets have dropped harder. Some have not dropped at all. Some have dropped at a steady curve because the entire market doesn't drop all continuously at once. So there are markets that have dropped prices dramatically, which we've stated before. There are prices. It's all very interesting to me that if we click the back button here, let me clear everything. Does it work? No. No, it does not. So do I just turn off the anote? If I click that, no, it stays right up there. Wow, so I have to use an eraser, right? Oh, wow, really does just work like that. It's an eraser. Cool. Why do you think they wouldn't point out the fact that, and you know this as well as I do, they do the month over month when it suits them. They use year over year when it suits them. And here we are with a month over month thing that I think would be literally just as powerful as anything else, right? And NAR will do this. They are historically really weird about this this data trend of month over month. We've gained another $12,000 in appreciation, or we've sold another 100,000. It's the best real estate market ever. Month over. I'll tell you exactly where they do it for those of you who don't know. Foreclosures month over month. Wow. They're still remarkably down. They're like 2000 numbers. They're like pre-1999 numbers. Like it's the lowest month over month of foreclosure growth we've ever seen when it suits them. Year over year, foreclosure activity is at an all-time record low. Well, a year ago we were in COVID. We're coming out of COVID and we're still having the same issues. So this particular fact that they just literally seem to be blowing off like this is just, and shout out to the one video that I saw this on. I think it was like a Stoic Financial video or something. I don't even know what I was watching that got me to this. And it was said, for the last 3 months, we've been depreciating. And I go, I would know about that. I mean, I read the numbers, I read the reports every single day. I watch all the websites. It was the first time I heard this. Were you aware that appreciation has been dropping for 3 months, Fred?
I'm not surprised by it.
I would agree.
Yeah.
I would agree with that. I mean, historically, you've been in the real estate business a very long time, Fred. Are you surprised that they're sticking with let's go back to their headline, 7% appreciation? Wow. I mean, now is the right time to own a home and get that equity. Are you surprised that they're kind of hiding guess what? Oh, by the way, panel 2, we have been depreciating for the last 3 months.
Well, Lee, I have some opinions about, how to handle this type of market, which
I'd love to hear it.
Which is great for people looking to buy or people looking to sell. And the reason, because there's realtors on the call, and I just want people to know what to tell their clients so that way they're educated, because I think that is what is helpful with this data, because the data is the data and they're going to massage it the way they want the real estate market to appear. So just like any political post on Facebook or anything that talks about religion, half the people are going to agree with you and half the people won't. So it doesn't matter what comes out of your mouth. They're either going to halfway agree or halfway not agree. So I wrote something that I thought was bulletproof. And when I say bulletproof, that you can't argue the sky's blue unless you're colorblind. You can't argue 2 + 2 is 4 unless you don't know how to add correctly. So what I wrote is something about what happened with Zillow. And I think this is very positive and helpful at the same time for people who are listening. So I said, you know why Zillow is selling homes and losing money? It's
Why?
Because they don't want to get caught holding the bag.
Yep.
2 years from now, they are actually going to be looked at as saying how smart they were for selling right now. That is my honest opinion. There are 2 million homes thanks to your data, Lee, at least 30 days delinquent, and another 1.2 million homes 90 days delinquent in the United States.
Yep.
That's 1 million more homes in default than 2007.
Yep.
Here's the one thing that Zillow got right, which these are millennial kids, right, that own that company, if I'm not mistaken.
Yep.
The market prices are coming down, and that's why they're selling. Good for them, right? I agree that this is the best time in history of real estate to sell your home, because if you know the data, like you and I do, Lee, we know what's happening, what's going to happen. And I don't, when we were talking in 2015 at some of the events, there were things that you were saying that I didn't necessarily agree with. And I hope you didn't agree with me either, because that's what makes smart people smarter, is to have a good debate about something. But I'm not going to say you're right or wrong. I'm just going to say, popcorn, please. Let's grab the popcorn and see what happens. So what I'm saying is, if you're paying cash for a house, sit tight, baby. Don't buy. Do not buy right now if you're paying cash for a house, because I see the prices dropping. However, if you're getting a mortgage and you're financing it, when should you buy a house?
Right.
Before or after the mortgage interest rates go up. But I don't think that the mortgage, I think the prices are going to drop, and I don't want to buy right now.
Right.
Okay, but are you paying cash? No, you're not paying cash. Oh, you're financing it. Okay, well, so here's what I did. I analyzed, I said, what happens if home prices drop 10%, which is conservative, and what happens if interest rates go up 1.5%? And I did a side-by-side comparison of that. And I analyzed a $500,000 home. Do you know what the price difference was on the mortgage payment?
What was it, Fred?
$56.21.
What?
And I have this little flyer that I did that I can share with everyone here, that they can use and put their own name on it and use it for their own marketing purposes if they want. And basically,
you should share that in the group, Fred. They would love it. There's a little flippy folder thingy, and you could just send it out to everybody who's smart enough to be on this call today. And those that are listening to it back, well, you'll have to go to homeadvocates.io, check out Fred's new profile, and we'll add a link to Fred's profile, because he'll be listed as the COO later this afternoon.
And I will, and after I'm done making this point, I'll figure out how to try to share it with everybody.
Okay.
I need my son Trey to help.
I completely understand.
So
nobody should know as much about computers as I do, and it's shocking that I know more than people half my age about computers.
So I said, these are unprecedented times that we're dealing with right now, because in California, as long as you own your home for 7 years, historically speaking, even if prices drop after you buy it, the value of the property is going to be worth more than what you paid for it 7 years from now, as long as you can ride out the storm. And the storm is, how far are home prices going to drop because of this foreclosure stuff? We don't know. But in my opinion, Zillow is smart. And they're also the real estate agent killer, which we all know about, because realtors are paying for their own, demise. And
they are. What? Am I the only one who gets that NAR doesn't do anything anymore? Like, I feel like I'm standing on the side. I want to be NAR's biggest advocate, because it is an advocacy program. But boy, between the DOJ and everything else going on with NAR, I can't. Are they just doing PR to tell everybody everything's okay?
Well, Zillow Offers was the thing that tried to get rid of realtors, and they've been pretty successful at it. The only problem is that they didn't time the market correctly, and they're not good at doing the rehab at Robert Fragoso type rehab prices. So The problem is that these people are not smart enough to be in the game.
Right.
They got caught holding the bag. And so now what I'm saying is Zillow ain't Zillowing very well.
No, not
Who
at all.
knows?
Well, let's talk about this for a quick second, and then we'll circle back around on the other thing. So they were buying up until a couple of weeks ago, right? And people, and I stated this on videos last week. My God, they're listing properties, percentage wise from properties they bought 3 months ago below market value. And now looking at the data that I literally got in the past 24 hours. Yeah, they're really smart. All they did was look at the month over month numbers that came out and went, hey, look, the market's depreciating. We got to sell the properties. We need to get out of this. They waited a month to see if it corrected. They waited another month to see if the market would correct itself. And they went, no. And I think somebody else brought this up on another video that I enjoy. One of the I think there's about 6 of us who've been talking about this on the web. I'm the only one who did it live, and I did it long before anybody was making videos. But Zillow has more market data than anyone else, period. They have more than NAR. Every single rental, every single listing, every single piece of property that moves gets sent through that Zillow machine. And their last press release, they said this, Fred, and it's very telling. We're uncertain about the market. Okay, let me translate that now that I know what they're looking at, that I'm now looking at, that even Fred's looking at. Based on our data, the market is not correcting itself and it's going on a downward trend. And we're done. Peace out. Like literally, like kiss the 2 fingers, make the salute to the sky. Peace out. We're out. Right? Let's lay off 25% of the workforce. Now let's compare that to what Wells did 6 months ago when they dropped their equity line and I will quote MSNBC and 2 senators. Well, they're just out of their minds. What do they think they're doing? They're hurting homeowners. They're no longer making equity line loans. They're laying off staff. They're shutting down operations. They're no longer making shaky loans. Look at those companies side by side. Wells Fargo did it 6 months ago. Zillow, the biggest, baddest creature on the planet in real estate, who's now lost an ungodly amount of stock market share based on what they've done. Who's next? BlackRock? Will that make everybody notice? Hey, BlackRock selling off its portfolio. No big deal. They're just trying to cash in at the top of the market. Market's never been better. Like, how long can you keep saying it? You've got 2 major companies that have done the same thing in a 6-month period. And yet, mainstream news, everything's great. We're not in a bubble. We're not in a recession. We don't have supply shortages. Really? Go to Costco. Really, I recommend everybody goes to Costco and gets hipped up to what's going on. Like, there's a reason why Biden's approval rating is only at what, 40%? What scary, skanky little number is it? Like 38%? He's like the worst approval rating of any president in history at this moment. And do you think it's because he's worried about an infrastructure bill or he's not handling COVID correctly? You're out of your mind. It's the fact that people are unemployed. They're not handing out free money anymore. Nobody's going back to work. We have supply issues. Everything costs 5 times what it should. Yesterday, I'm watching the Stephen Colbert. We have a meat shortage happening now on top of the gas prices that are through the roof. No, we're not in a recession. How long are you going to keep saying it? Like, how long are you going to keep saying the real estate market's okay? We're not in we're in an everything bubble. This isn't just a bubble in real estate. This is, holy crap, it's really going to suck for a decade because of COVID. And the smartest thing, I'm now looking at what they did during COVID as probably a brilliant move. And let's discuss what they did. From your perspective, Fred, the minute they dropped to the emergency rate, how did you do loans all over California? How much did it boost your business when they dropped that rate to 3%?
I was up at 3:30 in the morning yesterday, and I worked until 9 o'clock.
Right.
I cannot keep up. I'm seeing more purchase business now and less refi, but it's been overwhelming, and it's to the point where I got, you know, I understood the definition of working yourself to death. I said, if I keep doing this, I'm literally going to kill myself. And so I had to stop all my advertising. And it was just recently that I restarted it, but then now it's getting super busy again.
Yeah.
So you can only handle so much.
Well, let's talk about that for a quick second, right? So up until a couple of weeks ago, the Fed did what it said it was going to do, right? We were going to stop printing money, which they still haven't done, as of November 1st. But on November 1st, they started to inch the interest rates back up on purchases, right? We were talking about this just a couple of days ago. It got as high as 3.5%, correct?
It got up to, it was 2.625. We were doing refis at on a 30-year about a month ago. Then it got up to 3.125, which is a 0.5% higher. And then, and basically the reason why that happened was because the Fed said they were buying bonds at the rate of $140 billion per month. And what they started to do is said, we're going to start tapering. We're not
Right.
going to buy so many bonds. And that was the nail in the coffin for higher rates. Because with inflation, there's only one way to stop it, and that's higher interest rates.
Yep.
So we're at 6.2% inflation in the last quarter.
Yep.
You know, I mean, something crazy like that. It's predicted at 8 to 10% this year, inflation. So the only way to stop it is higher interest rates, which is the reason why I was talking about if prices of real estate go down 10% and interest rates go up 1.5%, we're going to have a major affordability issue, which we already do.
We do.
And then on top of that, we're going to see the real estate sales slow down because, the only people that are going to be buying are, these specialty type properties and the ones that can make them money. So I got my popcorn out and I'm just watching it, and it's starting to unfold right now in front of our eyes because the real estate market is not quite as busy. It's 4 offers instead of 15 offers. Just depends on the area.
Well, let's add up data, which I like to do in these moments. Just a few weeks ago, I said we only have a right time to sell, right time to buy approval of 66% of people in the United States say now is not the right time to buy, right? Those are traditional purchasers. I said the interest rate going up would have an effect on that. It certainly has. Do I think Zillow had an effect on any of this? No. I think Zillow's basing it on 2 numbers specifically. The same way I think Wells did it much sooner than everybody else. Wells looked at the data and went, this is not sustainable. We're done making shaky loans. We're not giving people their equity. We're out. And they're just sitting back. They've literally been saying since day one, we're sitting out till January, and they're looking like damn geniuses while senators and people went on TV and said, this is the dumbest bank on the planet. If you ask me what bank you should have your money in at this moment, if I was in any bank, and I'm with Chase, just so everybody knows, I'd be in Wells Fargo. Wells Fargo seems to have a good head on their shoulders. They figured this out during the summer. Zillow waited 3 whole months of market depreciation, and they had all the data. But at the 3rd month, and Fred pointed this out, so we showed 6% inflation over the last couple of months, and now we're showing a depreciation in the overall value of properties. Again, I'm not a rocket scientist. I'm a former banker who only cares about assets, okay? From my perspective, Fred, if I were sitting at a meeting and somebody asked me, what do you think is going to happen? I said, why don't you just draw a line and that'll tell you where the bottom of the market is. Like you could theoretically just take, a pen, and I think you could almost straight line this based on the way the depreciation looks. And I could be completely wrong, and I'll probably wind up doing this in my spare time for fun. But if you took this line and projected it off all the way, right? You could probably figure out in months where you're going to be in the next year or two. I think the number that everybody goes to is year over year, right? So I would probably project it in a year. So is that enough for mainstream media, which is, I get it, slanted on telling a story, whatever that story is. But is that going to be enough for people to start saying, again, I don't think it's a market crash. I think what you're looking at on the screen is a market correction, but it's a dramatic market correction. Do you think it's going to be, we're going, I'll reframe that. We're going to see dramatic crashes in certain markets. You overappreciated in certain places just too dramatically. Miami's overappreciating at an unbelievable rate. Las Vegas, Austin, Southern California, our prices are just dumb. So those numbers are going to look extremely dramatic. And it's really hard for me to tell investors right now, yeah, you should keep buying. And the only sales pitch that I can see is there's not a lot of inventory, so you have to buy whatever's available, which explains their continued purchasing. Because if I invest, let's say 300,000 and I'm renting it out and it's paying me 10 or 20 or 30% on my money to rent it out or do a verbo with that property, then it makes sense to keep investing at these top prices. But it's not going to be enough to sustain the overall health of this market. Like, I don't see any way around this, Fred. There's no fix. What, you going to drop the interest rates to 2%? I mean, that's what's left, right? I mean, the only thing you could theoretically do is make money cheaper.
The interest rates, if they keep them low, it's going to only just pour more potion into the inflation pot that the witches are brewing right now. So it's not going to solve the inflation problem. It's just going to sustain the real estate market. And back in 2007, 8, 9, and 10, the problem that got us into the recession, or the Great Recession, was the same problem that got us out of the recession. When the real estate market tumbled, that's what got us into the Great Recession. When the real estate market rebounded, that's what got us out of the out of the Great Recession. I think the same thing's going to happen here. I think that they are going to focus on keeping the real estate market strong. They're not going to release the foreclosure data to the evening news at 5 and 6 o'clock. The general public is not going to be learning about this data. The only thing that we can do with this data is use it with our homeowners that we're selling their homes for. This is great data to give to a homeowner to say, look, when do you want to sell? Before or after real estate prices drop? Let me just share this data with you. Let me show you what's happening to median home prices. Let me explain to you, and I was figuring out what the numbers were. It was 2.75% drop on median prices in the last 3 months.
Yep. I'm doing it right now myself, and I'm looking at the numbers, and I'm like, well, now we can just project it. It's
so if it's 2.75% every quarter, we're talking 3%, times 4, that's 10 to 12% a year. And I estimated 10 to 12%. And when's it going to bottom out? Well, it all depends on affordability. And affordability, if it keeps dropping, then they're going to have to keep dropping the home prices. So is 20% unrealistic for a 1 to 2 year recession on home prices? I don't know, but I'm not discounting that. And, to be honest with you, I'm just looking at my own personal situation that I have, because I'm building a swimming pool at my house, and I'm in a vacation rental area right next to Indio and, Stagecoach and Coachella. And I'm like, I can sell my home for 100% profit. I mean, it is doubled in the last 12 months. And after my pool's done, I can make a lot of money off my house. And it is just so tempting to sell rather than get the vacation rental income. It's like do I sell now and then go rent somewhere for a year or two and then come back to my same community and go buy another property that went down in value by 20%? Is that a smart idea?
Right.
It really is. I'm really debating it in my own head.
Well, I'm going to answer Jane's question because he's right. Jane says these are national numbers. You're correct, Jane. And markets are based on the top 100 markets, right? So let's have a discussion about that. Media and influence is based on national figures, not individual markets. If you think that individual markets and individual news drive your market, you would be 100% incorrect. I call it the Fox CNN effect. Half of the country watches CNN, half of the country watches Fox, and that's what people base their behaviors on. And this that I'm showing you on the screen, what Fred and I are discussing, is not discussed. What's discussed is evictions, which nobody talks about anymore, which, by the way, are on a rise. Why isn't the media in an outrage about it? It's being talked about in the individual markets where it's happening. You can Google it and take a look. Foreclosures, and you will see local stories, your local Fox 5 or your local, NBC affiliate. They're talking about it because they're independently operated and they actually have the ability to write those stories. The national news stories, this isn't a conspiracy on my part, okay? I just know this. The news is just marketing. It's not the news. Does that make sense the way I said it, Fred?
Yeah, it does.
Okay. So Fox, CNN, MSNBC, those are big, giant money-making content creators. And gloom and doom definitely sells, but telling everybody that there's a fire sale is not. It's not. It does nothing healthy out there. News is their product. Correct, Don. But correct news is not their product either. It's no different than when I put this out. Look, I could look at this data on the screen and make a lot of arguments. I can make a lot of arguments based on what I'm looking at on the screen. And one of them is, look at where we were in 2018, long before the pandemic, in a very healthy area, right? We still had a massive amount of national appreciation, right? We are close to $100,000 more in national median price. The average homeowner has $51,500 in equity. John Oliver did a piece on it on the last week tonight about generational equity. It was discussed. It's been discussed by senators and congressmen. Why? Why are you hammering us over the head about the amount of equity we have? Unless, again, data that we're not privy to, or the way you want to read a report, which is the way I read it, which is, well, that's because there's like 3 million plus people, which would be 1 million more than 2007, who aren't making their payments, and nobody's going back to work. And we do have hyperinflation, not inflation, it's hyperinflation. This is just ridiculous at this point. I don't even know what the debate is, debating whether or not we're in an inflationary period. We have been for a year. COVID helped it out. I don't buy into the conspiracies. I think COVID happened at a horrible time. I think it's a very real thing that happened to very real people, including my daughter. So everybody take a deep breath that, this isn't, they want to put nanobots in us. I'm going to share with you the biggest secret I know on the planet, and everybody take this to heart. The government wants you alive, buying, selling, and paying taxes. They will do anything in their power, including giving you money, to continue to do that. For every dollar they stick in, that they print themselves like China, which is what they've been doing, it means $4 to the economy, which is why you've seen economic growth. So what numbers do they stand on? The economy's never been stronger. Less people are unemployed. Everybody's going back to work. Month over month, it looks great. Year over year, it looks great. Well, a year ago, we were in the pandemic. I mean, seriously. Tell me about 2018. Tell me about 2019. And if I look at these numbers compared to then, no doubt no doubt we are in a percentage of appreciation. They're right. Year over year, it's still a 7% growth. That's not the story. How many months of declines before you go, yeah, that's been a lot of months of decline? What, 3, 4, 5, 6, 10, 20, 30? Let's go to Boise, where we've said that days on market and the amount of inventory has gone up exponentially. Well, it's still the highest these houses have ever sold for. Keep telling yourself that story, right? People who do luxury houses are the first ones to report in. Nobody's buying ultra high-end luxury houses right now. Why is that? What do they know that the rest of us don't know, right? Or are they just being smarter with their money? It's harder to move things above $1 million. This is what boggles my mind. There are only about 300,000 active listings in the United States. That is 10% of the quantity of people who've missed payments. Now let's take that 3 million number for a second. When they reach 91 days at 5 p.m., this is a fact. 85% will not make another payment again. It'll be a transfer of title, one way or the other, right? Yeah, some will pay current, some will pay off, but 85% are going to transfer title. It's going to go all the way. They're not going to make another payment again. It's a historic fact going back to when I started in 88. So that means 2.4 million people are going to transfer title over the coming year or two. But nobody wants to work on this until what? We ring the bell on CNN and MSNBC. This is what blows me away about people who don't want to work in district. There's not a lot of market data. What more market data do you actually need? I mean, what, you don't want to be first? You want to be in the line. You want to wait till everybody's in. This is my theory, Fred, and you've been in real estate as long as me. Why is it that people in real estate have to wait until a 500-pound weight drops on their foot, breaks their foot, puts them in traction, for them to then be sitting there in the hospital bed with screws and nails and pinned up to the ceiling going, wow, I should have saw that big giant weight coming. How much is it going to cost to fix my foot, right? Instead of, we're looking at it. This is the beginning. Do I think that the market could magically correct itself? If somebody could pose to me a way that the market could correct itself, and there are only two ways to correct it, right? Less inventory, right? That's number one. Or number two, the only other way to correct it would be to drop the interest rates even lower. So let's address that. We could shut down the supply of inventory, Fred. I mean, is that a plausible thing? I mean, we've been averaging now right around 300,000 active listings in the US. And again, to answer Jane's question, yes, right? It's national, but the national numbers drive independent markets. Is it likely that they could drop the interest rates further?
Yes, it is.
Wow.
But I don't think
what would that look like? I'm excited. Did I lose you?
Starting.
Oh, there you are. Okay, so could they drop it below 3%? I mean, what would that look like in a normal world?
I got a call on my phone. So the answer to your question is, Lee, is that if they drop it below 3%, it's just going to have more people buying the properties and allowing more people to have more activity. And it's just going to cause more sellers to sell because they're going to realize that the market is only going to last a certain length of time and that they got to take advantage while they can.
Yeah, I would agree. I would agree.
That's my opinion.
I don't know if it's likely, though. Is it likely? Did I lose you? I lost Fred. So, with all that said, I'm
sorry, Lee. Sorry,
no, that's okay.
I had a phone call and I apologize about that.
No, that's okay. Is it likely that they'll drop the interest rates further?
No.
No, I don't think so either. I think their only option is to raise the interest rate and slow down, which will create more inventory, which will create the continued 2.75% decline that's happening month over month. Now, to answer Jane's question, places like Miami and Palm Beach, and of course there are certain markets. My God, I'm near Coronado. Coronado's never going to lose its value ever. Like, it's a finite number of properties. Same for a lot of these communities. But what's it mean for Vegas? What's it mean for Phoenix, where Zillow got out of first? If I was in Phoenix right now, I would be so invested in doing distressed properties, it would make your head spin. But for everybody listening, go to homeadvocates.io, and on there you can find videos and you can find updates and you can watch a video. You can find out about how to join Home Advocates. And I've been handed a note by our CEO yet again, who quietly is doing this. You didn't take down the page. Again, good job, Derek. So this is still up, even though I told him to take it down in Vegas. So to invest in Home Advocates, you would click on Join Home Advocates, and this is our online published price, right? You click Get Started. It's $49.97. Derek apparently doesn't listen to me, and hopefully Fred will be able to control him now. If you go to the /event, which I'm sharing with everybody on the call, it's /event/, and I'm sending it to everybody in the room. My last webinar, which I haven't done a webinar in almost a month, there is a one-time 66% off that'll get you in for $19.97 if I've never worked with you before. If I've worked with you before, if you're, and very kind on my part, Short Sale Genius, AMS, or Monster Marketing, click on the link. It's a one-time fee for $9.97. And that's it. It's a lifetime enrollment. Fred knows this, Derek knows this, and I'll announce it now. Starting just before December, we're switching the model of how you can join. The prices are going up, which is why Derek is yanking my chain on not raising the prices, and bothersome, and I'm trying not to lose my mind like I did in Vegas. But we're going to basically be doing a version of our marketing program, very stripped down, with no call center, with no leads. It'll look just sort of like the original Monster program on a monthly fee, and that will be the only way to get in unless you invest the $5,000 one-time uptime fee. So take advantage of the $19.97. If I've never worked with you before, the $9.97. I can't believe Derek won't adjust the prices, but you know, and there's also some very helpful links. I will also have Derek, who's now taking control of this page, add a link for the Fred flyer once we get it, and we'll add it to this page. We'll add it to the email when we send it back out. So we appreciate all of you, and we'll take questions from the room.
Lee, I wanted just to mention sorry,